Yo, what's good? What's good? Ashton, welcome. Rajic, welcome. AY M1 or die. Welcome. Hey yo, give me 5 minutes and just I'm gonna go take a piss real quick and I'll be back and get right into it. You feel me? Don't you make me go and get all sentimental. Baby, you a dime, you a masterpiece. Bro said thanks for the playlist. Hey, you're welcome, G. Bro said the foundation and the beats playlist goes hard. Nah, I appreciate that. But other than that, like how have you guys been? How's the trading going? And especially what I want to know specifically are the roadblocks that you man are going through. You feel me? What obstacles have you faced? What were your strengths and weaknesses during this month of May so far? And while you guys tell me about that, I'm gonna do a whole top-down analysis, you know? Lower time frame structure to higher time frame narrative. But first we'll just focus on lower time frame structure, right? Alright, cool. Let me just do this. So this is the 5 second. I'm just gonna zoom out, just see where we are. This is what I see. Ninja traders are lagging. Alright, cool. Put you in a picture on my masterpiece. Don't you make me go and get all sentimental. 15 seconds in. Baby, you a dime, cool. We got structural low there. Got closure there. An unmitigated zone below it. So we got that and that. Let me go into the 1 minute. We close about it. Well, we'll figure that out. I really zoom read the narrative. Apart from that, price is coming from this range, this previous range. Okay. Making sense. I'm gonna have to verify this on the 15 minutes, but that is the last down. Let's see though. Yeah, okay, cool. I was way off. No. Alright, cool. So All right, cool. So that's just structure. Let me see what you guys are saying though. So, good, bro. My roadblocks at school right now. Hey, listen, school ain't your roadblock. Just focus your attention on managing your time. You feel me? That's what I recommend you to do. Yeah, time is your tool. Remember that. And yes, what do I want to say? When it comes to someone's lifestyle, you know, not everyone has responsibilities, and everyone manages their time accordingly. Now, depending on your goals, you just need to manage yours accordingly, like, you know, favoring that. So just find the time. You've got the time. Everyone has 24 hours in a day. You feel? I think I'm struggling with valid swings. You know how we will see body close on one but not the other, bro. Do these work on gold and four? Oh yeah, it works in every pair. It works in every pair. Exactly. Price moves regardless of the instrument or the asset. Yeah. So, okay, cool. Valid swings. All right. I'm just gonna zoom in now and just see. Now, I wanted to see if this was a closure though. Okay, cool. We did get a closure above it. 1 in 5 minutes. Let me see. Huh? Okay. All right then. Oh, I did slightly get a closure above. Okay, cool. But fact is, that is a closure above. This is where we are now. Now, let me see the shaded box here. So this is the last pullback before price closed above the structural high. This is a high probability area. Will I be using it? No. But as for identifying high probability areas, this is one of them. This is another one of them. There's two. So this is the last down candle responsible for the structural low. That was validated after putting in a new high, closing above a structural high, this becoming a previous high, and creating a previous range from the higher time. But don't worry, I'm going to show you guys how I even came to that conclusion. So, as for right now, let me just see. Let's see what I'm going to be engaging. So remove that. And let me alright, cool. Failure to close below this structural low from the 1 minute. In the event that price does fail to close below it, I'm paying attention to the last down candle responsible for the structural low. If not, it can just rip right through it and bounce from here. So this is the last down candle, responsible for the structural low, but on a higher time frame, responsible for the closure above there. This one is just, you know, on a lower time frame here. So either this or that, right? Okay, so that's what I'm waiting for. Let me So Ashton, you're talking about where you have these two arrows, are those technically weak lows? No, they're not. In fact, I may as well go through it now. Alright, cool. So I'm gonna go through structural highs and lows with you. Let me just hide these. Maybe hold on. Let me see here. Where's the best example I can? Anyway, I'll just use this. So you see prices in a cycle of high highs and higher lows. Previously, it was in a cycle of lower highs and lower lows, right? So I'm going to explain. So in order to actually explain your question and to actually correct you, I'm going to have to actually talk about structural highs and lows, and then you'll understand what constitutes a weak low or a weak high, right? So that's what I'm going to do. So yeah, it's easy on the 5 minute. So a closure below a structural low validates a structural high. But why is this a structural low? What makes it valid as a structural low? So in a cycle of lower highs and lower lows, a structural low is valid when price closes above the last down candle. The structural high is valid. So this is the last down candle here. Price did not close above it. So as price continues to go lower, this is the last down candle. So let me not jump too far ahead. To validate a structural high, price needs to close below a structural low, validating a structural high. Price came all the way up near it, but it didn't close above it. And you see price shift down, right? So likewise, in a cycle of lower highs and lower lows, the structural low is valid after a closure above the last down candle. Structural high is valid after a closure below it. Let me be more specific, my bad. After a closure below the structural low. Now, you was talking about weak low, right? Now, of course, you was talking about it in a cycle of high highs and high lows. So, of course, in a cycle of lower highs and lower lows, you'd be talking about a weak high. A weak high is literally until price closes below a structural low, this high is weak. Likewise, let me actually just go on 1 minute now, I'll be clearer. So we see this right here, right? On a 5 minute, what does it look like? Do we get closure above here? Cool, so it's valid as a reversal. So in a cycle of higher highs and higher lows, a structural high is valid after a closure below the last up candle. Structural low, which would be this low right here. The structural low is only valid after a closure above the structural high. Now, until price closes above it, let me be more specific here, my bad. Until price closes above the structural high, this low is weak. So weak is when it has not been validated. Exactly, my bro. Exactly. So hopefully that answers your question. And if you want more an in-depth and if you want more an in-depth explanation, even though I really just explained it, if you go in the description right now, you see a link to the playlist called The Foundation. Just go on the video, structural highs and lows, you'll be good to go. The rules that I explained are in the description of all of those videos as well. Those rules are fixed. So yeah, those are the rules that I abide by when it comes to analyzing structure. No problem, bro. Problem. So let me yeah, so that's a 5 minute that I'm on now. Let me just my drum is back. Yeah, waiting for a move below these structural lows. Let me see what this 15 seconds talking about. So we've got that. So we're in a cycle of high highs and high lows, right? So what's a valid pullback? So after a closure above a structural high, a pullback is valid after price closes below the last up candle. closure below the last up candle. That's a valid pullback. So yeah, that's in the foundation playlist as well. It's the highest up candle, right? Yeah, so look, even in the foundation playlist, there's a video called the last up and down candle. I'll run through it briefly here as well. I don't really care. Price ain't doing shit anyways. But yeah. So I'm gonna this is the last up candle. Why? Well, first, it's an up candle because it closed above the open. So that's why it's an up candle. But it's the last up candle because it moved above the high of the previous up candle. So it's the last one. So when you're following price, I want to start somewhere. Oh, fuck it, I'll just start here. This is an up candle because the open, this is an up candle because it closed above the open. The candle closed above the open. The next candle opened and moved higher than the previous up candle, making it the last up candle. Now it doesn't need to close. It doesn't need to close. It just has to move up above, aka a wick, right? So as you can see, the next candle opens and it moves above the previous up candle. Now there can only be, at a time, there can only be one last up candle at a time. Like there can't be two at the same time. Because it's the last one, right? So, oh shit, on my mouse, bro. But it's the highest up candle. For example, this one here. This is an up candle because it closed above the open, right? It didn't close above the previous up candle, but it moved above it. This is the last up candle right here. Yeah, because sometimes there's a high that is higher than the last up candle. Yeah. And in times of, especially, let me see if I can find a good example rather than just, oh, right here. Let me remove this. Before this up candle right here, right? You see how this down candle created a higher high? So this down candle moved above the previous, well, no. This down candle moved above the last up candle's high. So this high belongs to the last up candle.
Yo, Bash, you been tripping on them hoes.
So let's say price makes a down candle, and that down candle moved above the high of the last up candle, then the higher high that was made from the higher high that was made from the down candle belongs to the last up candle. Boom. But yeah, I'm going through it briefly, but in the foundation playlist, you can learn it right there. What's Price doing now? Hi, dog. Yeah, man, trust me. And listen, when it comes to the foundation playlist that I had, bro, I've given you all the tools to be profitable, bro. Given you all the tools, all the components. So like, I've given you the correct way to see price. I've given you all the components to see, to look for, to identify how price moves. You feel me? I've given you all the tools you need to be profitable. That's all you need. It's called a foundation for a real. It's called bro. What is with my words today? It's called the foundation for a reason, because that's what you build off. I'm giving you the tools to what's that word? To build from. You have your own system, right? You have your own personality. Every trader trades in their own authentic way. You and I will not trade the same, but price will move the same. I gave you the tools for that. Hey, Jimmy, I appreciate it, yo. And I'm glad it helped. But trust me, it's just the foundation. There's still way more shit for you to learn, bro. Like, because look, when you've mastered that playlist, that foundation, when you've mastered how price moves, then now you move on to the next step. Now you need to learn how to use that information. Now you need to learn how to use the way price moves, and you need to find your little spot in the market. You need to find your move in the market, what you want to engage in. Now you need to open your eyes to see that every single time. And you build the system off that. Now in my group Masters of Price, I teach my system. I teach my own way of using the foundational, of using what I've taught in the foundation playlist. I'm teaching how I use that information to end every day in profit. And Jimmy, I rate that. See, to be able to actually go through the lengths of study of ICT and DTFX and be profitable, that takes a certain character, I'll be real. Because ICT's library is heavy. DTFX is heavy too. But that's what it takes though. A lot of traders expect a cookie cutter model. What's your entry model? I get asked that a lot of times, and I don't mind. I wrote to bro, I don't mind. Many people will frown upon it, like, you know, don't go straight to the entries or don't go straight to the system. And that I do agree with. But then at the same time, you want to show people the light, right? People are only asking about my entry model because they want to see if it actually fucking works. And it does. So I don't mind showing people my entry model. But then at the same time, to even understand how to use my entry model. Okay, cool. Now that's a different Now that's a different ball game. Now you need to actually understand how price moves. You feel me? It's prerequisites to this shit. Two years of studying recently became profitable. Come on, man, G. Hey, listen, it's not easy, G. It's not easy, bro. But you know what I love about trading? Hey, Friction, what's good, my bro? You know what I love about trading? I was even having I was talking to, you know, a member of my group. And to sum up the conversation, or a topic within a conversation anyway, we'll talk for hours, but you see the obstacles that you face when you're learning to trade, when you're even, not even learning to trade, when you're learning to even understand concepts for you to believe in and use for your decision making. Like, gee, I don't think there's anything harder than that in trading when it comes to life. Because if you're able to get through those obstacles, trust me, it's not easy, but it is possible. But if you're able to get through those obstacles, all the other obstacles in your other areas of life won't be as hard as the obstacles that you face in trade. Because the obstacles that you face through trading, they're not obstacles that are outside of you. There are obstacles that are within you. See, the obstacle that you face when you're learning how to trade is yourself. But see, not many people go through that. Not many people even take the time. Oh shit, we just closed. Oh, we didn't close, moved above, but not many people take the time to actually check themselves. You feel me? Like, nobody really takes the time to reflect upon their actions, to reflect upon the decisions that they make, and actually learn from it. To actually learn from their mistakes. In trading, you got to do that. So Jimmy, keep on going, man. And forget this whole idea now. You got a new one. The market's doing something new, so I'm gonna follow it. Ray tick while going, my G. But I named the stream Tracking Highs and Lows for a reason, because that's the first thing that you gotta do, bro. As in, that's your first rule. And the look at me. I'm trying to use big words. The culmination of everything in the playlist. Jeez, culmination, you know. Just popped in my head. I don't even think that's the right way to use it, but fuck it, I fully use it. The culmination of everything in the playlist all comes down to tracking your highs and lows. Yeah, man, I felt bad clever saying that. But don't mind me, friend. Listen, it's really about tracking your highs and lows. That's where you start from. You need to see the market from a correct perspective. You see me? Now you don't wanna. Nah, I'll save that for later, right, bro? I have to say. I have to save that for later. Lately, I don't even look at the left side that often. I just trade the right side. Friction nodes. Hey, friction nodes. Yeah, man. And it's exactly that. Using the highs and lows from a higher time frame to understand the lower time frame, that is the key. Because the structure from the higher time frame governs what. See, the movement of the lower time frame don't govern what's going on in the higher time frame. It's the higher time frame structure that governs what's going on on the lower time frame. Once I can master where price is coming from and where it's going, I'll be okay. Oh yeah, trust me, you can get that, bro. You put your head down, bro. I've made the playlist so simple for you that even a child could understand. Put your head down, bro. Learn that playlist and you'll be good to go. Seriously. Is that box your valid pullback? Yes, sir. But this is on the 15 second. A pullback on the 15 second. So check this out. Oh, the music paused. Alright, cool. Let me hear. So you see the closure? Right there. And you see the closure below the up candle after closing above the structural high. So that's the pullback. This is also a high probability area. So in the foundation playlist, I talk about the last pullback before closing above a structural high. That's a high probability area to trade from. Oh shit, yeah. Look at me humming and there's no music. Where the beats go? In the last couple weeks, experimented with 1-to-1 of the 50% of almost every swing. It's powerful. We started to refine which swings to take. All right side of the chart, obviously. Calm, man. And listen, you see the whole point of you observing what happens at the 50% is so that at the 50%, you're understanding what is to the left of that 50%. And usually, there are two high probability areas there at the 50%. I personally don't use the 50% no more because at the same time, 50% is just a number. But soon, as you see price move away from the 50% more and more, you know what? Why am I even talking when I can just show you? Let me just change the... Let's do this real quick. Remove that, apply that. So this is the 50% of this previous range. Likewise, we have the same thing right here. So you guys that are watching the stream right now, you guys see what Raytick is talking about? The 1-to-1 from the 50% of the range. Let me see, let me get the risk to reward out. Price, oh okay, this is yet to touch the 50%. So this is what he's talking about. And this is where you start, guys. Like when you learn about previous ranges and stuff, observe the 50% and the 1-to-1 that comes out. So the 1-to-1 is literally price moving into the 50% and trading up to the previous high that you're measuring from, you know, the previous high to the structural low in a cycle of high highs and lower lows. So that is also a good thing to observe when you're learning everything that I'm really talking about. But the reason why I even drew these 50% lines is because it's not because the 50% line is there that price is moving away from it. No, the 50% line or the 30% or the 70%, whichever you may choose to see, those are just guidelines for you to check and see what is to the left and what price is reacting from. This is the last down candle responsible for the structural low. Yes, price moved into the 50%, but this is a move embedded in price action. That, as you guys can see, let me just remove this. I'll remove this too. And I talk about this in the foundation playlist too, high probability areas. This is the last down candle responsible for the structural low. As you get price tapped it, 1, 2, 3, it whipped inside there, and you see the move at the beginning of the whole area, and you see an immediate shift away. 3 times. The 3rd time broke structure to the top. So Raytick, when you believe that, you know, you're getting good results from the 50%, I encourage you to now look and see what is to the left within the previous range that you're measuring and where most of these reactions come from. And if you watch high probability areas in the foundation playlist, you will see that most of the moves do come from those 2 specific areas. The last down candle responsible for the structural low and the last pullback before price closes above a structural high. Now, of course, for those of you that, you know, study DTFX, it's literally just the S&D responsible and the origin of the move. Yes, I know, but I'm saying it in a way where just because I say S&D responsible and origin of the move, for someone that doesn't know shit, what the fuck does that even mean? Right? That's why I'm explaining it like, okay, cool. The last down candle responsible for the structural low. And we know that a structural low is only valid after it closes above a structural high, right? So I'm doing my best to use language like price language, bro. What the fuck is price language? I don't know, but you guys try to. I'm trying to talk candlesticks, not create another label. There's plenty of other labels in the industry already, and labels for the same shit. You feel me? So don't get caught up in labels. Just do your best to like follow price action. Candlesticks, you feel me? But yeah, man, Raytick, you're doing good, bro. You're doing good still. Keep it going. Hey, Ashton, have a good time as well, man. YDN, good afternoon as well, man. Don't worry about being late. You're good. You don't know what S&DR or Origin is, the better go watch the Masterclass playlist, not gonna lie. Yeah, I mean, if you don't know what the S&DR or the Origin is, I'm not even gonna say go watch the Masterclass. I'll say go watch the Foundation playlist and click on high probability areas. That's what I'll say. You feel me, Carl? The reason why I say that is because I've really simplified it to where you can identify it, and it's a fixed rule. This shit is not changing. I want you to pay attention to how I explain things. This shit don't change. I repeat the same thing over and over again, but it just looks different on the chart. But the principle of how price moves remains the same. Tree Phoenix, he said, hey, real talk, I watched your playlist and everything you're talking is easy to understand and I appreciate that. Hey, you know what? I appreciate that feedback. For real. Because I can't lie, even while I was making the playlist, I knew I understood it. Don't get twisted. I knew this shit is working for me, but even in general, like with trading and stuff, I knew this shit is working for me, but it takes, a system isn't proven until someone other than the author can produce the same results and better. You guys see what I'm talking about? That is the only reason I even hopped on YouTube. But you know, since what, March? Oh yeah, I've been proved to myself, and I've been proved to myself that yeah, man, yeah, this shit is legit. This shit is real. Like, it's not even about me no more. It's not even about me no more, because I'm seeing that people that are learning the same principles that I'm teaching in Masters of Price, fuck it, even on my YouTube channel, they're seeing the same thing that I am. They're getting the same results as I am. Come on, man. Can't fake this shit. I watched the streams that I missed. In one of them, after you read my comment in the chat, you asked me my name. Sorry for not answering you because I've already left the stream. Ain't no problem, G. Jumped in and just a few minutes to press a line. So thank you. My name is Alex. But if you prefer, I'll be real, bro. I prefer to call you Alex. But yo, it's never too late. It's been a while since your last live stream. Hope everything's good with you, man. Hey, listen. I know it's been a while since I last did a live stream, man. The only reason why I haven't been streaming is because I really came upon an understanding that people were seeing what I was doing, they were rating it, they were like, this is the feedback that I kept on getting. Bro, you're on a mad thing. I don't know what the fuck you're doing, but I rate your results. I rate what you're doing. I'm seeing you trade live. I rate it, but I don't know what you're doing. And I'm just thinking, bro, what are you talking about? I'm explaining everything. So basically, I found out that I need to do better, right? I need to explain better in the way I teach. I ain't a fucking teacher, bro. And essentially, that's the whole reason I came on YouTube, right? I wanted people to learn the information that I'm giving them. So like, okay, cool. Let me just take a step back. And you see that foundation playlist that I just came out with, that I uploaded? That was me taking the time to build that, so that it would be easier for people to see what I'm seeing. Puthenix's name is Alex too. That's dope, man. But yeah, most of my time has been with the Masters of Price as well. Because it's a one-on-one mentorship, like it does take a lot of energy from you as well. but don't get it twisted. Like, don't expect me to like live stream every single day. Like at this point, I'm only gonna live stream with purpose now. Before, I used to live stream every single time that I was trading. When I was trading, I'd live stream. But the reason why I kind of laid back on that and just stopped doing that is because I realized I was just chatting shit. Real talk. Like, cool, I'd be teaching at the same time, but I'd be chatting shit. As in, I wouldn't be talking about what price is doing right now. Most of the time. Because price wasn't doing shit. You know? So I didn't really want to waste people's time like that. So the approach that I'm taking now is that, okay, cool, if I'm going to hop on live streams, it better be like, yo, make sure to drive this point home, this certain topic home. Make sure to like actually touch on it and make sure people understand it. So that's the approach that I'm doing my live streams now. You know? First, don't think I realized there's no green and red candles. Just yo, I recommend you guys just, you know, change your chart colors to one color. Trust me, it will do wonders. It will do wonders because, you know, I used to have my chart colors like, let me get rid of this now. I already did my point with that. Yeah, I used to trade with red and green candles. However, this is me. This is me personally, right? So when I was trading red and green candles, it was a thing where I wasn't even paying attention to the open high, low, and close of a candle. So when I used to see a green candle, my mind would automatically think, oh yeah, we're going up. If I see a red candle, my mind would automatically think, oh yeah, we're going down. That used to fuck me up. You don't want to think like that. So when I just said, you know what, I'm gonna try out this one color for candles thing, right? I just made, so as you guys can see, my candles are just white. Bro, when I tell you, it forced me to actually pay attention to, because I had to open my eyes. Okay, where is the open? Where is the high? Where is the close? Where is the low? Because that's the only way I'll be able to tell if price is going up or going down. So it just forced me to really pay more attention to detail. That's all. That's all. That's all. That's the only reason why I have my candles in one color, to pay more attention to detail. Now, of course, you may not have the same problem as me. And if you don't, then cool. I mean, the color is not really that much of a performance factor. It is for me, but it won't be for everybody. But yeah, I'm still waiting for price. Let me see what the 15 second is saying. So look, you see in cases like this, I would wait for structural low to be taken, right? But we have this area here, but there's no low for us to take. What I'd usually wait for is something like this. Take that out. Now, if price were to come down like this, I would not be using this. I'm not saying that this area of price won't move away and give an explosive move like it has been doing in the past. I'm just saying that I will not engage in that type. Why? Because it doesn't follow my rules. I need a structural low to be taken first. And right now, that structural low is here. No, this is not a structural low. So, you know, it's just a matter of me being patient. Are you man like the stream, fam? There's 11 man watching right now and there's only 2 likes. Like, what is that? So I'd appreciate it if you learn something new. Like the stream. Let's make this information global. Because this is really some next level shit. Like, it feels so normal to me, but I'm realizing at the same time that not many people know what structure is. Not many people even focus on the movement of price. Man, the shit that I see publicly on YouTube is appalling. As far as like the trading industry goes, you feel me? Like, it's just a bunch of man. Let's just say, it's a lot of people that know how to manipulate someone's attention. How? Through glamour. You feel me? Through glamour. I'm sure you guys know what I mean. Such as, well, unrealistic, bro. I'm fumbling on my words today. It's a mad thing, but unrealistic expectations on profits. Unrealistic expectations on trades. Unrealistic expectations on lifestyle. And completely wrong mindsets. This is what I'm seeing. And I'm realizing that most men on the YouTube thing, they're not really trading, bro. Them men are not really trading. Like, it's time we get some real niggas on the platform, I'll be real. But in time, real eyes, what's that saying? Real eyes recognize real right. That's like some secondary school shit, I swear. Oh man, alright. So unfortunately, I missed most of the stream. On your previous range video from the foundation players, I commented a question about how to use, okay, cool. About higher time frame previous range use and lower time frame previous range. If you already answered me at the beginning, I'll see it clear. Oh, how you would use the higher time frame previous range and how you would use the lower time frame previous range. So after price closes above a structural high, right? The previous range from a higher time frame is measured from the previous high to the structural low. This is used as your directional bias. So right now, my directional bias is that price is going up. Now, it's also important that you know what time frame you're on. My directional bias, when it comes to previous ranges from a higher time frame, minimum, at the very least, must come from the 1 minute. Now, as for previous ranges from the lower time frame, it's used to time counter trend moves. So moves that are counter the direction of the previous range from the higher time frame. So this direction is going up, right? So your directional bias from the previous range from the higher time frame is up. The previous ranges, so in the event that we do close up above this high, this would be another previous range on a lower time frame. Right? These are used to time a move against the direction of the higher time frame previous range. And you guys, if you saw my past streams, you'd hear me talk about 4 to 6 swings or 4 to 6 pullbacks and then price reverses. So the pullbacks that you see after a structural low. So if you go on a lower time frame, but this is a structural low, right? You see these pullbacks happen after the structural low. This is what you're counting. You want to see 4 of these before you even think about engaging in a move against the direction of the higher time frame previous range. So if I go on a 15-second right now, you'll see that these are just previous ranges, but on the lower time frame, right? Previous high to the structural low. Now this is not a previous range yet, but in the event that we do close above this high, it becomes a previous range. And it's the same thing here. If I go on a 5 second, you'll see that even within this previous range, you will see that this is a higher time frame previous range now, and there's little pullbacks within it. Let me highlight this for you. So I said 4 to 6 pullbacks and price reverses, right? There we go. There's a closure. If you go in a 1 second, you will see how this looks now. Pullbacks after the structural low. That's what you count. Those are what that's what the lower time frame previous ranges are for. It's the time it moved against the direction of the higher time frame previous range. Now, I've went in depth with this in Masters of Price. That's why I didn't really go too in depth with it in the foundation playlist, because that's for the group. But yeah, hopefully that answers your question. Let me see. Yeah, so Alex, I just went through the whole how to use the higher time frame previous range and the lower time frame previous range. I'm gonna erase all of this now. And you guys see me on the 1 second doing this shit, but this shit is fractal. It happens with all time frames. Damn, what is NinjaTrader doing? My shit may have crashed you. There we go. Delete that. Delete that. Where is price now? Oh shit, we have another pullback here. I didn't even catch that there. So right now, I'm counting my pullbacks after the structural low. These are lower time frame previous ranges. So what I want to see before I even engage in a sell position are 4 pullbacks. So essentially, when I see some shit like this, I'm engaging in a move here. To go down. Well, we don't even stretch it out like that. We can just do that. don't even need that right now. Just do that. Yeah. Yo, Alex, you're welcome, bro. And listen, even I was struggling a bit with that when it comes to a directional bias because, yeah, cool, I knew what a previous range was, but I didn't know how to use it. And after, like you said, you just need to back test it. After I went into back testing and I just observed the pattern of behavior of how price reacts to the previous ranges, that's the conclusion that I came to. And after testing and testing it, that's what I use. That's how I use the information for my own decision making. Let me see what the 15-second is doing. I'm gonna remove this. I'll keep this since that's the area, and then I want to see where this last down candle is. There we go. Yeah, the best move is this shit right here. Even though I did erase it, but yeah, this is the structural law. Just depends on how structure develops within this range, but whatever. You use only one time frame to mark structure and to take a trade? Nah, my G. So what you guys are watching right now is I'm seeing my TV right in front of me. You feel me? And if just pay attention to you see MNQ June 24 1 minute. So I've basically got the 1 second, 5 second, 15 second, 1 minute, 5 minute, 50 minute, 4 hour daily. Now, I'll be real, I don't really go above the 15 minute like that. Most of the time, I just stop at the 5 minute. But my vision is fixed on the 1 minute. But when I'm analyzing structure, so in fact, when you watch this stream, if you go to the beginning of the stream, you will see me actually do a top-down analysis. So when I analyze structure, this is how I do it. I'll go through it again. I start from the seconds time frame. And I'm like, okay, cool, what do I see? I map out my structure, and then I go to the 15-second time frame. I zoom out. So yeah, I forgot to mention that. So I'm on the seconds time frame and I zoom all the way out to the max. And I analyze structure. Then I go up to the 15 second. I analyze structure again. 1 minute, I zoom out. I analyze structure again. The 5 minute, I zoom out. I analyze structure again. 50 minute, I didn't zoom out in the 50 minutes still, but you know, it's the same shit. And that's as far as I'll probably go back to analyze structure. And then I would zoom in to now see the detail of what's going on. So I zoom in the 15 minute, and I'll zoom in the 5 minute. And the detail, what do I mean by detail? I'm just talking about the candlesticks. Because when I'm zoomed out like this, I'm just getting the bigger picture. But the candlesticks is able to tell me, the detail of it. And then I'd zoom in on the 1 minute and I'd stop there. Now, my analysis and my observation is fixed on the 1 minute. However, my setups, the way I analyze, it's from the 15 second. So my setups come from like the analysis I get from the 15 second. But I stay on the 1 minute because ultimately the major decision to enter in a trade comes from the 1 minute. But when I'm talking about, okay, cool, I need a structural low to be taken. I need to see chases get liquidated out of the market. I need to see 4 to 6 pullbacks first. I'm looking at the seconds time frame for that. But when I'm looking for a failure to close below the last down candle, when I'm entering in a position, which is basically like the last condition, that comes from the 1 minute because that gives me my target. Now I know a lot of what I said is probably just, it went over your head, but that's why I teach in my group, Masters of Price, you feel me? That's my entry criteria. That's how I choose to enter in the market. So what advice would you give to someone after watching your playlist? The advice I'd give them is, shit, I even forgot to make a video on that. But yeah, it's really just a back test each concept. So I want you to record observations of structural highs and lows. Record observations on your structural highs and lows, your pullbacks, your high probability areas, your previous ranges. Just record observations on what that playlist teaches you. Record observations of the principles and rules that I tell you to observe. And build your own conviction that it's true, because we're both seeing the same shit. And when you record these observations, trust me, you're gonna see powerful moves that you're seeing over and over and over again. And I'll tell you right now, you're gonna start thinking, bro, how do I participate in them moves there? That's what you're gonna start thinking. That's when you know that, okay, cool, yeah, you built your own conviction. Now you wanna learn how to engage in that move. That's when I suggest you join Masters of Price. Because then now it's a whole nother level. But I'll give you one thing. I'll give you one thing, yeah? Start counting your pullbacks. Start counting your pullbacks. That's the beginning of profitability. Start counting your pullbacks. 4 to 6. Price reverses at 4 to 6 pullbacks. I'm talking about using the information from the foundation playlist. Start at counting your pullbacks. The lower time frame previous ranges, start counting them and observe that. If you're not ready to join Masters of Price, yeah, you feel me? I'll give you that. Yeah, so I'm not gonna be involved in this. So But yeah, man. I can't lie. This has been a sick stream. I appreciate everybody that's rolled through. It's been a sick stream, man. But I appreciate it, man. Are you gonna post more advanced videos on YouTube or just the Masters of Press? So the advanced videos is just gonna be in Masters of Press. So the advanced videos will just be focused on how to engage in the market, using the information from the foundation to build a system from and trade profitably with. That is what I'm currently working on now. It's gonna be in the same structure as the foundation playlist, so I'm laying it out super simple. See? Told you I ain't using that zone, boy. I ain't you. Damn. But yeah, that's what it's gonna be about. So thank you for everybody being on the stream, man. I can't wait to see what results that you guys get with the information that I put out in the foundational playlist. And definitely follow my Twitter. Send me DMs. My DMs are open, I think. If not, I'd actually go check. But I'll make sure my DMs are open. You guys can even send me your charts through DM and I'll give you feedback on it as well. Because I believe that's very important. That's what I actually make sure to do in Masters of Price. Because feedback is the most important thing in order for you to learn quick. You need that quick feedback, and that is what I provide. It's a one-on-one mentorship for a reason. This ain't no group mentorship. Yes, you're in a group. Yes, you're connected with like-minded traders too. But primarily, it's a one-on-one mentorship. Now, if you can't join Masters of Price, that's cool, man. Just DM me on Twitter. It's in the description of the video. At Future Sammy. Send me your charts. I'll go over them. So yeah, man. I'll see you guys next time. Yo, Alex, the two Alexes. Yeah, yo, I appreciate it, man. I appreciate you actually being on the stream, man. Yeah, I'll see you guys next time. Take care, man. Take care, and make sure to back test these concepts, man. I can't wait for you guys to actually see the results that I'm seeing, bro. Like, oh, Lord. But yeah, man. Thank you. I appreciate all of you, man. Take care.